Hey everybody, John Skiba here from the Consumer Warrior YouTube channel. And in this video today, I'm going to talk about something a little bit different. We talk a lot about how to defend debt collection lawsuits on this channel, but usually we're talking about how to defend lawsuits that are brought by junk debt buyers like Midland Funding, Portfolio Recovery, all the other debt buyers who are claiming to have purchased the debt from the original creditor. Well, in today's video, I'm going to talk about what you do if you get sued by the original creditor itself. We're talking about companies like Capital One, American Express, Wells Fargo, Bank of America, and some of these banks that sometimes don't sell their debts to junk debt buyers, but actually file their lawsuits all on their own. But if this is your first time here to my YouTube channel, please click subscribe, check on that little bell. That way you'll be notified each and every week when I put out multiple videos that'll help you deal with your serious debt problem. All right, so like I said, today I want to talk about original creditor lawsuits and how those differ from lawsuits that are brought by junk debt buyers and why you really need to take a different approach and a different strategy when trying to defeat them and just deal with them in general. Now, like I said, most credit card companies, they sell their debt after 6 months of no payment. It gets charged off and they sell it to companies called junk debt buyers. These junk debt buyers then in turn either sell them to another company or they'll actually file a lawsuit with the whole goal of getting a judgment against you so they can garnish your wages or levy your bank account or make life miserable. But however, there are certain collectors and certain credit card companies that do not sell their debt to third-party junk debt buyers. One of the main ones that does not do that is American Express. They file the lawsuits on their own and collect directly. We see this with Discover Bank. We see this sometimes with Bank of America, particularly with larger credit cards. They tend to keep it in-house and sue on their own. Capital One will do this sometimes. Some of these other credit card companies, they'll bring these lawsuits on their own and try to get the judgment. Now, the reason why this is important to understand the distinction is because the strategies that I often teach that relate to junk debt buyers, a lot of times they don't work as well when you're dealing with an original creditor. The reason is when you're litigating against a junk debt buyer, a lot of the defenses revolve around the fact that they just struggle to prove their case. You know, they don't have the documents, they don't have the witnesses from the original creditor. Well, if American Express is suing you, you can assume that they have the witnesses because the witness works for them. They have the documents because the documents are in their own databases. And so they have a lot of the information that's lacking in a lot of the other junk debt buyer cases. So then the question is, what's the strategy? What's the way to deal with these cases because they are so much different? Well, I'm going to give you a few strategies as far as how you can go about resolving the lawsuit altogether. And now let's talk about litigating the case first of all. If you're going to contest the allegations, if you're going to litigate the case, there are some strategies that still work that we use with junk debt buyer cases that will work with the original creditor cases. First among those is compelling private arbitration. We use this strategy a lot in junk debt buyer cases where we will use essentially their contract against them. The terms and conditions of the credit card company will often have an arbitration clause where you can assert this and say, hey, we don't want to deal with this in the court. We want to deal with this through the private arbitration process, through AAA, JAMS. I'll put some links down in the notes here below the video where I go into a lot deeper dive on the whole compelling arbitration process. But it does work for original creditor cases as well, mostly because the attorney's offices that are handling the collections for American Express or whoever, they're doing this in huge volume. And if you compel arbitration, it takes it out of the court system where they're comfortable, where their whole system is, set up and organized to deal with it. It's going to push it into arbitration where they don't want to be. And often that leads to either a settlement or even a dismissal of the case outright. So if you're in court, if they're suing you, one thing you can do is you can compel arbitration and see if you can get the case thrown out that way, or at least put yourself in a better situation as it relates to coming up with some type of settlement agreement. Again, second thing, when you're litigating the case, a lot of the defenses are going to be very fact specific, not as general as the junk debt buyer ones. And what I mean by that is if you have specific facts related to maybe the person or the entity, the credit card company that lent you the money, maybe they didn't provide a specific service, or maybe you disputed a charge and said that there was some identity theft or some fraud going on, and you have those types of defenses that you can assert, then those are good cases to litigate. If it's something where there was an identity theft or you disputed a charge and American Express or whoever, Discover Bank, they ignore you on that, that's something you can bring up in the litigation and raise as a true defense to the case. And so that's something that you want to think about. It's very fact specific. If there's something like that in your credit card case, then litigation is not a bad way to go because you can raise those defenses defenses, and like I said, either get it thrown out or at least put yourself in a better situation to try to settle the case for less than what it is that they're seeking. The next thing you can do when you have a original creditor debt collection lawsuit is you can look to settle the case where you're paying less than it is what they're seeking through the lawsuit itself. Now, if you don't have any real defenses, you can still try to settle it, and they'll often agree to a lump sum. However, if you're dealing with the original creditor, they typically want a much higher amount to settle the case in a lump sum than they would if it was like a junk debt buyer. Junk debt buyers will often settle for anywhere from 20 to 40% of the total amount owed, whereas the original creditor, they're going to want something closer to 70 to 90% of the total amount owed. Some creditors, again, American Express, they're a difficult one. They want high settlements. They're going to want almost the full balance. They might discount it a bit, but not a whole lot. And so it's important to understand when you're going into settlement discussions and negotiations with an original creditor that it is going to be somewhat different than if you're dealing with like a debt collection firm or a junk debt buyer, something like that. When you're doing the settlement, because it's a higher amount, usually what I see with clients is that they want to do payment plans. If you're going to want a payment plan, you're going to likely have to do what's called a stipulated judgment. This is where you're agreeing that judgment can be entered against you. However, there's a term in there that states that you're going to be able to pay a certain payment plan over time, and as long as you're making that payment plan, they're not able to come in and try to garnish you or do any kind of wage garnishment or bank levy, anything like that. For example, a typical stipulated judgment, let's say you owe $25,000 on the American Express card. You could approach them and say, look, I'll settle this case. I'm willing to pay, instead of $25,000, I will pay $18,000. I'm going to pay $400 a month, and I'm going to stretch it out however many months that is. You're going to stretch it out and make those payments each and every month. And you'll sign off on this stipulated judgment stating that in the event that I don't make those payments as agreed, you already have your judgment and you don't have to do anything further as far as litigation or refile the case, anything like that. You already have your judgment. You need to make sure that there's a term in there though, what's called a covenant not to execute, meaning that they will not try to collect on the debt as long as you're making the payments. And the only way that they will try to collect on those payments through garnishment or bank levy is if you're not making the payments as agreed. It's kind of it's a payment plan for you. You know, a lot of times you get several years on this kind of thing, but at the same point, it's kind of an insurance policy for the debt collector, for the creditor, stating that they don't have to refile the lawsuit and they have their judgment in the event that you don't follow through. The next and the final thing that you can do with an original creditor lawsuit is, again, the nuclear option, is bankruptcy. You could file a Chapter 7 bankruptcy, and assuming that you qualify for it based on the means test, you can eliminate the debt completely. It'll get rid of the judgment, it'll get rid of the lawsuit, it gets rid of the debt, and there's nothing really they can do to try to collect on it. If it's something where you're like, you know, there's just no way I can settle this, I can't do payments, I can't do a lump sum, you can look at a bankruptcy option to get rid of the whole thing completely and just get the thing out of your life forever. And it will get rid of all other credit cards, medical bills, unsecured personal loans, all those types of things will go away in a bankruptcy filing. So if you're dealing with the original creditor lawsuit, it can be stressful, I get it. It's also a little bit more difficult to get the good deals, that you can get sometimes with junk debt buyers, but it's important to know that there are options. You can get it resolved, you can get it settled. Or even if you're litigating it, there are some options there, like I pointed out. If you're in the state of Arizona, check below here, you'll find my contact information. I'll be glad to see how I could help you out with any of those options. I also have some tutorials, if you're not in Arizona, that you can check out that can help you as you're trying to decide how best to deal with this lawsuit. Thanks for watching today, and we'll catch you next time.